August known for less volume, less liquidity. We also have the added pressure, the 10-year rising by 30 basis points, the U.S. credit rating downgrade, and just the anticipation of Jackson Hole. What do you both think? Gina, I'm going to start with you. Is this negative momentum we're seeing in August, do you see it continuing past Friday, maybe even to September?
Well, I think all eyes are going to be on Jackson Hole. I think that, where we are right now is just we've seen so much positive pricing in the market. And so valuations have been stretched through the market. Not terribly overvalued, but in some cases, probably. And so we're seeing some of that coming off. We're seeing the slowdown start to take effect. I mean, you saw the numbers out of both Macy's and Dick's. And that just tells you that people are tightening the purse strings. And as we go into this, the question is, what does Jerome Powell do now? Does he take a victory lap? I don't think he will. Does he set us up for another tightening, or does he simply just communicate the message that interest rates are going to stay higher for longer? That's where I think he's going to land, that higher for longer message. And if that's the case, then the softness that we're feeling in the markets is probably going to continue to unravel to a softer place so that it works with current interest rates.
I mean, Vance, same question. You're 95% invested in the market. How do you see the next few days playing out and then beyond?
Oh, I think it's going to be incredibly sloppy. I think the Nvidia earnings today is probably the most anticipated earnings release we've seen in a tremendous amount of time. I think that's going to cause a lot of volatility, whether it's good or bad. Of course, Jackson Hole, everybody's watching what Powell's going to say. I think on a short-term trade, if you want something very interesting, look at TLT, the 20-year treasuries. I mean, they've come down to about 92 bucks a share on that. If Powell comes out with anything dovish, I think he could get really a good spike in that trade. Really?
So, I mean, you're looking at bonds, but you're so deeply in the market right now. I just want to kind of pull on that string of Nvidia. Gina, I'm going to come over to you. How big of an impact do you think that Nvidia earnings will have on the market and the direction and momentum of the market? So many of the mega cap tech names are kind of tied to this AI trade.
Yeah, Nvidia is the bellwether right now for the AI trade, and there are reasons that they could be very robust. We have seen real demand in the data centers off of generative AI, but you've also seen, some slowdown and some inventories piling up because, gaming is not as strong as it was. And so you have a push and a pull on Nvidia. What happens in their earnings could actually determine what happens to some of the highest valued stocks in the market.
All right. Vance, I want to come back over to you. One of the things we're also looking at is downgrades, whether it's the U.S. credit rating or banks. How do you see that continuing to impact the market? We've continued to worry about credit tightness as well.
You have to worry about it. I mean, if Powell goes too fast, too far, look what happened to 3 banks. He threw them into bankruptcy. But, you got credit defaults have really risen. You look at car loan defaults on loans. They're defaulting at a much higher rate than what everybody anticipated. Used car sales are down. They're dropping because of interest rates are so high. To get a loan on a used car right now, it's 13.7%. That's pretty high. So you're going to see a slowdown. I mean, this organic move of interest rates being so high is going to really slow things down. You look at mortgage rates over 7. I mean, I think that Powell needs to sit on his hands and be patient here. I think he's going to do more harm than good if he comes out with a hawkish statement from Jackson Hole. And I think he's done raising rates. I mean, it's having its effect that he wants to have.
So, Gina, same question over to you. Vance is really focused on Jackson Hole. You mentioned it just a bit ago. Is that an inflection point for this market right now, or is what we're going to hear from Jay Powell, either way, bad or good, kind of already baked in?
Yeah, no, I completely agree with Vance, actually. I think that there is the potential to go too far, too fast, to go too far. Obviously, it's not too fast. We've been at this for a while. But what you're seeing in the banking sector is not just a slowdown in spending, but a slowdown in lending. And that is the cycle. That's the way interest rates work. They drive up interest rates. They dampen demand. And it is working. And so I think there is a concern, certainly from, I share the concern that if Powell comes out even more hawkish than he already is, that we run the risk of having a real policy mistake and putting us into a deeper recession or even just a recession. Right now, we're just priced in for a modest slowdown. Anything more than that, and we're really going to start to feel the pain in the banking sector.
All right, Vance, I'm going to give you the last word. You have a few picks for us to discuss. One of them is the SOXX. That's the semiconductor ETF. Nvidia, about 10% of that. So would you put money in that today ahead of that report?
Yeah, you know, Frank, we're bullish. The trend's up. I think you got to buy on pullbacks. I think the semiconductor index is a wonderful place to add money to. You know, AMD's pulled back to the point that it's very attractive. You know, Salesforce looks good to us, but I think there's a lot of opportunity. I think you're in a new bull market. August is clearly a sloppy month, and we're just wading through that. But we'll get through it. We'll get through Jackson Hole, and we'll get through Nvidia's earnings, and I think the market's going higher.